Many thanks, Nifemi. The World Bank, in its latest Global Economic Prospects report, says global economic growth is projected to slow to 2.3% in 2025 due to mounting trade tensions and persistent policy uncertainty. The bank, in a statement on its online media briefing center, shows that the new forecast is nearly half a percentage point lower than the rate projected at the beginning of the year. Reports indicated that the slowdown would mark the weakest non-recessionary global growth since 2008. According to the report, the turmoil has resulted in growth forecasts being cut in nearly 70% of all economies across all regions and income groups. It said despite of the gloomy outlook, a global recession is not anticipated. World Bank's Group Chief Economist and Senior Vice President for Development Economics, Indamit Gill, is also warning of deepening stagnation in the developed world. To drive sustainable growth, the report emphasized the need to improve business environment, expand productivity, employment, and align workforce skills with market demands. While as President Bola Tinubu continues the celebration of 2 years in office, and his administration has obviously embarked on ambitious economic reforms, notably with the removal of fuel subsidy and unification of the exchange rate. A senior economist with STIRS, Dumebi Oluwole, who spoke to me earlier today, bared our minds on the impact on businesses and the larger economy.
These are policies that we've been expecting over a period of time. We had gotten to the point where, it had to just be done, right? And if you remember from all the manifestos, from all the presidential candidates at the time in 2023, we did see that almost everybody was talking about close to the same set of policies that they were going to make. So they were going to end, the fuel subsidy regime. They were going to, liberalize the foreign exchange markets. We're going to reinstill, investor confidence in Nigeria's economy, and streamline monetary policy so that it's more, effective with in terms of inflation targeting, right? So I'll say that these are things that we did expect to happen. How fast, was what no one could really determine. But seeing the pace at which things have gone, I'd say we've seen green lights from the investor committee. Well, not necessarily committee, investor community. That's what I was trying to say. We've seen green lights from them, and what that just tells us is that the policies that we are making are, making headway.
Nigerian entrepreneurs play a vital role in countries' economic development, contributing significantly to GDP and job creation, particularly in the informal sector. They're driving innovation and diversification in tech, manufacturing, and agribusiness. However, challenges like high interest rates, funds, scarcity of funds, and all of that is hindering growth. A business enthusiast, Dr. Femi Oladele, shares insights on what can be done to support growth of MSMEs in Nigeria.
So I believe that we need larger systems that provide access to MSMEs with respect to the volume. Also, we understand that interest is a big issue. We cannot expect MSMEs. I usually give this analogy that if I take a bank facility or generally a facility at anything above 30%, if it's a 1 million facility, what it means is that I have to turn around that money to at least 2.5 million to be able to pay back my loan and also continue into the future, because there are other costs associated aside the finance cost. And so I don't think that we have done so much. We have many actors, government players, private sector doing lots in that area. But I believe that more still needs to be done, especially with respect to volume and with respect to the interest rates. The rates are too high for sustainability at this point, and we need patience, lots of patient capital in the MSME space if we want to see significant contributions.
Meanwhile, the stock market in Nigeria keeps its attraction among investors who are keen on building wealth through companies' equities and government bonds, where the index of the market closed positive at 0.18%, signaling gains on investments and price improvements for companies. Beja Paints secured 10% gains on deals as investors moved to other stocks. Others were eTransact, Legend Internet, Omatech, and Vitafoam. On the losers chart, it includes RT Briscoe, John Holtz, Better Glass, Aradale, and Deep Capital. Well, outside our shores now, global stocks rose and the dollar edged higher today as talks between the United States and China were set to extend to a second day, with signs that tension could be easing. But Euro Stock 50 futures and FTSE futures both edged up roughly 0.1%. Nasdaq and S&P 500 futures in the United States also gearing up for a higher open. Stocks advanced in Asia, with MSCI's broadest index of Asian Pacific shares outside of Japan advancing 0.7% to hit their highest since January 2022. In currencies, the dollar attempted to regain footing after falling on Monday. Dollar was up 0.19% against the yuan. Euro fell 0.17% to $1.14. Sterling slipped 0.07% to $1.35. Now, Nepal's central bank says the country has witnessed a surge in inflows of remittances and foreign exchange reserves between mid-April and mid-May 2025. Now, currently, remittances into Nepal stands at a record high of $1.2 billion during the period, as against $845.8 million recorded at the same period last year. The Apex Bank noted that during the first 10 months of the current 2024-2025 fiscal year, ending in mid-July, Nepal had received remittances worth $9.9 billion, which is 10.5% higher year-on-year. Likewise, the forex reserves grew 20.5% to $18.4 billion by mid-May, up $15.27 billion as at the same time last year.